Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Just a note for everyone watching on YouTube and Discord, Bookmap is encouraging everyone to join Discord. If you already not a Discord Bookmap subscriber, you can subscribe to a free version of Bookmap, and you would need that to join Bookmap Discord. Then you would need to verify your subscription, and with that you get full access to Discord chat in the chat channels like the Options-Doug chat channel, as well as watching in the stream in Bookmap Discord. So again, please join us in Discord. And if you're not already a Bookmap subscriber, you can subscribe to the free digital version and join us in Discord. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And likewise for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions or comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector. Hello, Stephen. Welcome. Glad you're here. All right, here's my agenda for today, Monday, September 9th. First of all, I want to go over news items, economic data, and events for the week. Then I'll take a look at my positional analysis from today. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. I'll be glad to do that. All right, let's get started with news items. Let's take a quick look at the economic calendar. This is the Spotgamma dashboard homepage. And this is the events calendar for the week. Not a lot here, but some key pieces of key data releases. All right, so first of all, not shown on this, the presidential debate, the first presidential debate between Harris and Trump tomorrow night, 9 p.m. Eastern Time. Then now to economic data. First of all, Wednesday, 8:30 a.m. Eastern Time. CPI data comes out. Again, 8:30 a.m. Eastern Time. Has definitely been a market mover in the past. The market and the Fed seems to be focused more on the economy now rather than inflation. But that comes out Wednesday morning. We'll talk about it on Wednesday afternoon. Then on Thursday, jobless claims and PPI data at 8:30 a.m. Eastern Time. And then on Friday, 10 a.m., Michigan consumer sentiment. All right, so just a few data releases this week, but all important. All right, that is the news for the week. Now let's move on to positional analysis. And I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I do want to take a look at a higher time frame. So I'm going to go to the underlying index, SPX. This is a 1 year, 1 day chart, 1 day chart for 1 year. Let's focus on the last few months, starting with July. So correction began July 17th. That was VIX expiration, 3 days before the July options expiration, the monthly options expiration. And this correction ended on Monday, August 5th. Over the weekend, of course, there was the Japan yen carry trade unwind, and then reversal higher on Monday, August 5th. That led to some consolidation. That was between, let's see, 55.60, 56.50. Now let's pick that up with a 1 hour chart. So this is a 30-day 1 hour chart. And here's the August 5th, low 51.19. SPX moved up, did a retest of 5,200. That was the put wall at the time. Here's that consolidation range between 55.60 and 56.50. And then last Tuesday, SPX broke down below that consolidation, broke down below 55.50. And then on Friday found support right around the 5,400 put wall. All right, so that is the current price action for SPX, the underlying index. Now let's take a look at levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. The dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, based on the closing price for SPX from last Friday. That level did act as resistance. The upper daily expected move acted as resistance earlier today, and now SPX is trading above that level. All right, those are the expected moves. Note I do post those levels in Discord every day the day before. And then the dark red lines are showing the Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers, available on a variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. First of all, the absolute gamma strike, L1 there, is at 5,000 now. That's a strike with the largest absolute and positive and negative gamma. That level did move down substantially from Friday, from 5,500 down to 5,000. And the next level up is the put wall at 5,300. That's a strike with the largest net negative gamma. That can be expected to act as support. And next level up is the volatility trigger at 55.15, the VT level there. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility both ways. Market makers are trading with price as it heads down and with price as it heads up. We'll take a closer look at that in just a minute. So note that SPX is trading below its volatility trigger and opened in a negative gamma position this morning. And then finally, the call wall has moved down to 5,700. That's a strike with the largest net positive gamma that can be expected to act as resistance. And note all four key daily levels move down from Friday. That is very bearish. All right, so those are the key daily levels for SPX. And let's wrap up our view of SPX with a 1-minute chart. So I have about 2.5 days worth of data here. Let me zoom in just a little bit. What I want to show is the test of around 5,400. That was the put wall on Friday. Again, the put wall has moved lower. And in fact, since that Tuesday breakdown that I mentioned, the put wall has moved down from 5,500 down to 5,300. And that 5,400 test of SPX on Friday so far was successful. And actually, that was closer. This is from Friday at the end of the day. And this is showing the SPY 540 put wall. And that was between those two levels, acting as support. The 540 put wall for SPY, and just above that was the 5,400 put wall for SPX. So a successful test of those levels on Friday. And then SPX gapped up today, found resistance at the upper daily expected move. That was a great setup, short setup that I was expecting. And then note that SPX still trading below its volatility trigger in a negative gamma environment. All right, let's move on to Bookmap now. So in Bookmap, I have my own cloud notes, so I can show SPX levels as well as SPY levels. Looks like S&P 500 is dropping pretty sharply here. We'll take a look at that in just a minute. So levels in play. So again, I have my own cloud notes, so I can show SPX levels. For example, here's the 5450 level. that was noted as support in the Spotgamma AM Founders Note. I also have SPY levels on this chart. Here's the SPY 540 level, 545 level. And then this is the, normally I do not show the SPX, daily expected moves, on this chart, but it was so important this morning that I just drew this in manually. All right, note there is a difference in price between ES and SPX, and today it is right around 9 points. So ES minus SPX, that offset, is 9, so I'm showing SPX 54.50 at ES 54.59. And note that offset approaches 0 as the contract rollover approaches, and that will be a week after this, so next week. And more about setups in a few minutes. So earlier today, again, upper daily expected move for SPX acting as resistance. And that was good for about a 30-point short, down to around SPY 543. Price rallied. Now maybe finding support at this level that was resistance before. So more about setups in a few minutes. All right, shifts in levels. Again, very bearish for SPX. All 4 key daily levels shifted lower. And for SPY, the volatility trigger and absolute gamma strike both shifted lower. So very bearish, shifts lower in the key daily levels for the S&P 500. All right, let's take a look at NASDAQ now. So this is the NQ futures and Bookmap. Let's take a quick look at the underlying index charts. First, I'm going to go to QQQ. This is a 1-minute chart, so 1 day of data, 1-minute chart. This is showing 545. That's just a round number level. That's not a Spotgamma level, acting as resistance earlier today. And then the 450 level, that is the absolute gamma strike for QQQ, acted as support. And QQQ made it back up to the 455 level, and finding a resistance at that level again. So again, 450 absolute gamma strike, 455 is just a round number. All right, let's take a quick look at NDX. Then we'll get back to NQ. Let's zoom in just a little bit. All right, NDX, there are some Spotgamma levels in play for today. First of all, the 0 gamma level. Around that level, acting as resistance. That's right here, 18,653. And then these levels below acting as support. That's a combo 2 level, combining NDX and QQQ, gamma-weighted open interest into one level shown here in terms of price for NDX, and then the put wall just above that at 18,500. All right, for QQQ, the volatility trigger shifted higher, but the put wall, call wall, and absolute gamma strike all shifted lower. So very bearish for QQQ, and for NDX, the volatility trigger shifted lower. So overall, for both the NASDAQ and the S&P 500, very bearish, shifts lower in the key daily levels. And again, more about setups in a few minutes. So just like the S&P 500 for ES, for NQ, I have my own cloud notes. There's that 0 gamma level for NDX. And then these several levels below, the 450 absolute gamma strike and the 18,500 put wall. acting as support. All right, so that is the levels in play for today. Now let's wrap up our positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. All negative for the S&P 500 and the NASDAQ. So in a negative gamma environment, this indicates for an index, traders are long puts, market makers are short puts, hence the negative gamma. They have to trade with price to hedge their delta exposure. Based on this is pretty negative, especially for the S&P 500. I was expecting wider trading range, more trends, wider trading range. And let's take a look now at the Vanna model to get a better idea of what that means. So what this chart is showing is this is for SPX, showing market makers delta notional. This is their delta exposure. On the vertical axis, price for SPX. On the horizontal axis, two curves on this chart. The light gray curve is showing how market makers delta notional may change with changes in price only. The purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. And that change in delta with the change in implied volatility is Vanna, the Vanna effect. Vanna is a second order Greek. And if there's any, if anyone has any more questions about this, wants any more additional information, Spotgamma recently posted a video on YouTube, the Spotgamma YouTube channel, about Charm and Vanna. That should be helpful. I suggest, if you have any interest in that, I suggest taking a look at that video. It's less than 10 minutes, I believe. All right, let's check on prices now. All right, so for the SPX, low of the day, right around 54.34. Earlier today, high of the day was right around 54.70, and now high of the day right around 54.84. All right, let's take a look at the Vanna model. So we know the low of the day was right around here. 54, there's 54.35. High of the day, 54.84. So price has increased, shown on the horizontal axis there. Implied volatility drops. Market makers delta notional has decreased, and they can buy back short futures. That's a put Vanna rally. So this works both ways. If price starts to drop, market makers will need to sell futures to hedge their delta exposure. So price increasing, implied volatility dropping, they can buy back short futures. And again, that works in the opposite direction as well in a negative gamma environment. So based on this, I was definitely bearish for the day based on the bearish shifts in levels. Also based on the negative gamma notional, the Vanna model, I was looking for a wider trading range, larger moves today. All right, that is my positional analysis. That was my positional analysis for today. Now let's move on to execution. So everything that I've looked at so far, other than Bookmap, is based on static data. The levels on the charts, the gamma notional Vanna model based on static data. Spotgamma takes open interest data, applies their algorithms, comes up with the information that we've taken a look at. Now let's move on from planning to execution to real-time data. I'm going to start with the S&P 500, and as always, I'm going to start by taking a look at what options traders have been doing today. This chart is the HIRO chart, HIRO, Hedging Impact Real-Time Options. This is provided to Spotgamma subscribers. And what this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The white line is the price of SPX, and the purple is the HIRO signal. A falling HIRO signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. And a rising HIRO signal indicates they're taking positive delta options positions. They're buying calls and or selling puts. All right, so that is the index signal. There's another signal that we can take a look at for the S&P 500. So again, remember this is the index signal, SPX, SPY, XSP, ES futures. And the other signal that we can take a look at is this S&P 500 equity signal. So what this chart is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. Typically, this signal is smoother than the index signal, but I think the index signal, especially in the morning, this is the one that I look at in the morning, it is a little bit more noisy, but I think it can provide more of a little bit more of a leading indicator. So the equity signal and the index signal. I'm going to go back and just to highlight the difference in the afternoon, note how the index signal is starting to make a series of lower highs just after 12 noon, and the index may be starting to roll over. The S&P SPX and the equity signal more closely correlated with price, but not really it's providing more of a confirmation, not really a leading indicator. All right, so let's go back to the index signal. I'm going to shift to puts and calls. Go back to the index signal. I'm going to go to full screen. All right, let's take a look at the short setup from this morning. So remember, all key daily levels for the SPX shifted lower, and 2 of 4 shifted lower for SPY. So my thesis for the day was bearish. And this is exactly what I was looking for, is this peak in the call signal. So the orange line is for calls. Rising orange line indicates traders are buying calls. And a rising blue line indicates traders are selling puts. So they were taking positive delta positions up until just after 10 a.m. Peak in the call signal, reverses sharply lower, and the put signal flattens out a little bit, then starts to shift lower. So starting right around 10:15, 10:20, both signals, call line and blue put line, moving in the same direction. So starting around 10:15, 10:20, traders were selling calls. They were buying puts, both negative delta options positions. Market makers were taking the opposite side of those trades. And for the index, they will hedge their delta exposure by selling futures. All right, so let's go take a look at Bookmap now. Now that did not last, of course. So let's go to Bookmap, S&P 500. Let's zoom in. All right, so what I was looking for was that peak in the call signal where traders shifted from buying calls to that sharp shift to selling calls. and looking for some key resistance level where that might happen. And that was right here, right just above the upper daily expected move for SPX, that dash blue line that I drew in there. All right, so let's take a look at the clues in Bookmap now. So we know traders shifted from buying calls to selling calls right as SPX approached that upper daily expected move. So again, let's take a look at clues in Bookmap. Let me expand this just a little bit. Oops. Sorry about that. All right, so as price was rising, you can see aggressive buyers coming in. That's shown by the volume dots in Bookmap. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. A lot of aggressive buyers. That's shown also by the rising cumulative volume delta. That's the dark blue line. Also buy stop orders helping to fuel that move higher. With that sharp peak, buyers were exhausted, shown by that small green volume dot right at the top. Let me darken up the heat map a little bit. The heat map is showing the history of limit orders in the order book. Note the limit sell orders right here. The darker bands indicate more orders. Those are limit sell orders. Absorption at that price. Then price starts to move lower. And one key signal here was the iceberg orders. Very typical behavior. Note the falling light blue line indicating large traders were fading that move. They were selling strength with iceberg orders they used to hide their size. That's also shown by the on-chart indicator. It's a little bit difficult to see that on-chart indicator with all the buy stop orders, but all these lines here these show iceberg orders that were partially executed, and then when the line stops, they were fully executed or canceled. So a lot of large traders selling that up move with iceberg orders, and a peak in the buy orders. Buyers are exhausted, and aggressive sellers start to come in, shown by the magenta volume dots, with that call peak and price move lower. Again, good for about a 30-point move lower in the SP 500 in ES futures. All right, so I thought that was a pretty easy read this morning. Let me tone down the heat map. There's often just a lot of noise around the S&P 500. All right, so unlike last week, unlike Tuesday, Wednesday, and Thursday, some buyers came back in right around SPY 543. You can see the shift in volume dots. Sellers are exhausted. Buyers start to come in. And note what large traders were doing of the iceberg orders. They were fading the move again. They were buying weakness, shown by the rising light blue line. And note how that stops as price reverses higher. And then the buy stop orders start to fuel the move higher, shown by the rising yellow line. So let's go back to Hero and see what options traders are doing. All right, so remember, we're still on the index signal. traders started taking advantage of these lower prices, started selling puts, and they had already started buying calls. Price moved higher. And now, starting just afternoon, starting just afternoon, traders started selling calls again. They stopped selling puts. Now they are buying puts and selling calls. Price is starting to move lower, starting to gradually roll over instead of that sharp peak like this morning. All right, let's check the equity signal now. So just like I mentioned before, this is typically smoother, but I think the index signal can often provide more of a leading indication of price. So here's the morning reversal. Traders stopped buying calls, started selling calls, started buying puts. Then that reverses right around 11:20. They start buying calls again, selling puts, and then it's rolling over now. All right, so right now, the S&P 500, both the equity signal and the index signal are bearish. So for both signals, call line and put line are both moving lower. All right, let's move on. Let's take a look at NASDAQ. So this is just like the S&P 500. There are two signals that we can take a look at for NASDAQ. This is the index signal, showing a combined signal of NDX and QQQ. And then there's also the Mag 7 signal. What this chart is showing is options trades and market maker hedging activity for all 7 stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. Just like the S&P 500, the Mag 7 signal is smoother, but and more closely correlated to price, but often it's just a confirmation rather than providing a leading indicator. So let's go back to NASDAQ. Sometimes NASDAQ signal is just too confusing to read. Today, I think it provided a pretty good signal. Let's open full screen. So here's that reversal. Right around 10:10. Call signal was already making lower highs. Reversed sharply lower just after 10:10. Put line also reversed sharply just after 10:10. All right, let's go back to Bookmap, go to NASDAQ. So in NASDAQ, sorry about that, aggressive buyers on the way up, aggressive sellers starting to come in, break below this trend line. First entry would have been 455. Second entry, break below the trend line, probably a safer entry, 454. Good for a move down to 450. So good for about 160 points in NASDAQ. And you can see the sharp reversal lower in the cumulative volume delta that shifts from dark blue to magenta as it shifts from positive to negative. And here's the reversal at 450. Sellers exhausted, aggressive buyers starting to come in. Note, just like the S&P 500, large traders were fading that move down with iceberg orders. Large traders, again, buying with iceberg orders on the way down. And as soon as price starts to rise, they take the foot off the gas. And then buy stop orders and aggressive buyers fuel the move higher. All right, let's go back and take a look at Hero again. All right, so there was a brief move higher in the index signal and then started to move lower again. The price reversed lower sometime later. All right, let's take a look at the Mag 7 signal. So again, you can see the reversal lower, more in line with price. Now here, this is providing a little bit of a leading indicator. Traders stopped selling calls, started buying calls in the Mag 7 stocks, started selling puts, price moved higher. Now again, traders are selling calls and buying puts in the Mag 7 stocks, and the NASDAQ is rolling over. All right, let's take a look at some stocks. Any questions? Any questions about the indexes? All right, let's take a look at Apple. All right, so Apple today, the key was this reaction at the 217.50 hedge wall. Remember that it acted as support on Friday. Let me check on that. All right, let's go take a look at Bookmap. So Hero signal kind of up and down today. Go to Apple. Here's that test of the 217.50 hedge wall. Prices made it back down to that level. And the 217 liquidity just below that. Let's go back to Hero. Zoom in just a bit. And I like to focus on key levels if they're available. So let's focus on this reversal higher at the 217.50 hedge wall. So price had already started to reverse higher. Then traders started buying calls and selling puts, and that helped to fuel the move lower, higher. All right, so not the cleanest setup there in Apple, but the reaction at the 217.50 hedge wall I thought was significant. All right, let's move on to Google. I'm going to zoom in just a little bit to the morning here. All right, so just like the index, there's that call peak that I like to look for. And this happened before the index. Call peak, traders start selling calls. A few minutes later, they start buying puts, and price moves lower. So this call peak and reversal lower, I think Spotgamma calls this the Matterhorn pattern, has been a very reliable short setup in the last few weeks. All right, so let's go take a look at Bookmap now. Go to Google. You know, of course, Google has been in the news with antitrust legal issues. Note 150 is the put wall. That level has been breached. Here's the reversal lower. So you can see the magenta volume dots, aggressive sellers start to come in. Price breaks below VWAP. Price moves down to the 150 put wall and continues lower, finally finding support at the 148 liquidity level there. Price reversed higher just above 148, classic absorption. All right, the next stock I want to take a look at is Meta. Let's go take a look at Hero, see what options traders are doing. Let's go to Meta. So here's another call peak Matterhorn pattern. Sharp reversal lower in calls. Just a few minutes, traders start buying puts as well. So just after 9:55, 10 a.m., traders were selling calls and buying puts. Blue line, orange line moving the same direction. Very powerful directional indicator. In that case, bearish. So again, this call peak comes before the index call peak. Let's go take a look at Bookmap. Here's Meta. So there's the initial reverse lower. Let me zoom in on this just a bit. So this is when traders started selling calls, that call peak. So you can see more magenta volume dots coming in. Price starts to make lower highs. Cumulative volume delta shifts from positive to negative. And then this is the market pulse price change indicator in the subchart there. That's showing a good entry point, that extreme, that bright green extreme, price change extreme, showing a good entry point for short if you weren't already short. All right, so both Google and Meta call peak short entries. And let's take a look at NVIDIA. Let's see what options traders are doing in NVIDIA. Let's zoom in on this a bit. NVIDIA up and down today. So right around the same time, the index has started to move lower. And often the Mag 7 signal is very close to the NVIDIA signal. And then the S&P equity signal is often very close to the Mag 7 signal. So maybe you could say the Mag 7 is the NVIDIA plus 7 and the equity signal is the Mag 7 plus 493. So NVIDIA call line, put line start to move lower. Right around 10:15, NVIDIA moves lower. Then the dip buyers come in right around 11, started buying calls, selling puts a few minutes later. And now that has reversed lower. Traders started buying puts just after 12:30 and started selling calls just after 1. Let's go back to Bookmap now. So here's that reversal lower. As traders started taking negative delta positions, break below VWAP. Not a lot of range in NVIDIA today. Then traders again started buying calls, selling puts, price moved higher. Now consolidating just around VWAP. Let's take a look at Tesla. Looks like pretty similar price action for Tesla. Pretty choppy, a little bit more range than NVIDIA. Let's see what options traders are doing. So here are a couple of call peaks in Tesla. So in the morning, traders aggressively buying calls, selling puts, and that finally reverses lower. In about 10:30, traders started buying puts, and that leveled off pretty quickly. Also selling calls, then price consolidated. All right, let's go take a look at. And so remember, for the first hour, the hero flow was bullish, then shifted bearish after 10:30. Let's go take a look at Bookmap. Zoom in. And I thought I had turned on market pulse price change for Tesla. Let's see. So in the morning, again, remember, for the first hour, traders are taking positive delta positions. NVIDIA found resistance, Tesla found resistance at 220. Again, absorption at that level. Dark band indicating limit sell orders at 220. Those were never consumed. Price moves up, consolidates, then at 10:30 breaks below 218 as traders started taking negative delta options positions. Looks like this was a little bit early. What I wanted to see was the market pulse price change indicator, helping to confirm the deeper pullbacks for an entry. All right, does anyone have any stocks they want me to take a look at? All right, Hector wants to take a look at ES Hero on extended trading hours. Yeah, we can do that. Let's shift to total. Close full screen. All right, normally I do not look at this. Spotgamma has noted it several times in the founder's notes. I normally do not look at this. And we can go to extended hours. This is for today. Now what I do look at is this index signal on extended hours. So Hector, this combines SPX, NES. So traders, options trades do trade before regular trading hours in SPX and ES. So traders can buy and sell options in SPX and ES before the regular trading hours. This is what I was looking at on Friday to give me a clue of that big reversal on Friday. So let's zoom in on this. All right, so Hector, I'm looking at SPX and SPX and ES. And today there was really nothing. This is pretty flat. And you can see this is 9:30, the cash open. So really no clue today in the extended trading hours. We can move it so we're just looking at extended hours here. All right, so it's pretty up and down. This notional value is pretty small. On Friday, I believe it was minus, I don't know, somewhere between 400 and 500 million. So that was pretty large for this S&P 500 index signal in the opening, especially given the pre-open positive response to the jobs report on Friday. Again, I talked about this on Friday. The options traders were not buying it. They were selling. They were fading that move higher with options trades in SPX and ES. All right, Hector. So there you go. We can, just to confirm, we'll go back and just look at ES. All right, so that was a little bit more bullish than the combined signal, but both SPX and ES will have an influence on price. So that's why I looked at the index signal rather than the SPX or ES separately. All right, let's shift back. Let's turn off extended hours. All right, DD wants to take a look at RLAY. Not familiar with that stock. I would be surprised if it is available. Certainly, I do not have that in Bookmap. And DD, sorry, it's not available in Hero either. All right, let's go back to the S&P 500. Looks like some dip buyers are coming in. Go back to full screen. Hero signal starting to shift higher. Now price consolidating. Let's check the equity signal. Looks like the signal has leveled off as well. Price consolidating. Let's go to Bookmap. Back to the S&P 500. So it looks like the S&P 500 may be finding support at the SPY 545 level. And that is just above VWAP. Oops. Just above VWAP, shown by the light blue line there. And then note the point of control. This is the session volume point of control. Has now moved up. So kind of a cluster of levels there. VWAP below. Now price breaking down. 545 and then the point of control. Zoom back out. So now down to the ES, upper daily expected move. Note I do calculate that level separately or independently from the SPX, daily expected moves. DD wants to take a look at Palantir. Sure, that is definitely available in Hero. I don't have it in a Bookmap. Palantir in the news being added to the SP 500. Bullish day in Palantir. Traders buying calls, driving price higher. When traders buy calls, market makers sell the calls. They have to buy stock dash their delta exposure. And it looks like call buyers definitely driving price in Palantir today. Sorry about that. Auto zoom. Palantir again. Pretty typical pattern. Call buyers have taken the foot off the gas and price consolidating. All right, that's wrap up our view of the indexes. Orange line and blue line now starting to rise. Equity signal call line has leveled off and traders continue to buy puts. All right, last call for questions. All right, everyone, I want to thank you very much for watching. Thank you very much for your questions and comments. Remember, on Wednesday, CPI data comes out. Could definitely be a market mover, and we'll talk about it on Wednesday afternoon. All right, everyone, have a great afternoon, and I will see you on Wednesday. Thanks. Bye.